Hello Form 3s, I hope you are well. I'm going to go through the memo of task 6.13 with you. This was actually a wonderful exercise in my opinion because it deals with every single new transaction that we have done so far this year. And it deals with it in a format that you guys usually struggle with, which is a transaction analysis format. Okay, so I'm going to go through it one by one. The first transaction was this one, where it said you purchased stock on credit. So this is straightforward. You know that it will go to the CJ. If we buy stock on credit, the amount of trading stock that we have will increase on the debit side. The amount of money that we owe to a creditor will also increase on the credit side. And that's it. Then the next transaction, also very straightforward, is we had cash sales of stock. And then they gave you the selling price of 413 Rand with a markup of 133.33%. Okay, so you know that this is a normal CRJ transaction because it's cash sales. It would affect 4 accounts because every single sale that we have affects 4 accounts. The first set of accounts will be affected by the selling price, which would be bank because it's a cash sale, so our bank increase. Sales, which is an owner's equity income account, also increased on the credit side, and the selling price was 413 Rand. And then the cost price must be recorded in cost of sales on the debit side and in trading inventory on the credit side. If you calculate your cost price, something that I hope you noticed is that it's a markup of 133.33%, not just 33.33%. Okay, so you would say selling price over 1 multiplied by 100 over 233, and a third percentage. If you don't have a calculator that can make a fraction, then you just say 0.33333, and then you'll get your 177 Rand cost price. Straightforward. There you go. Then the next transaction said payment made by a debtor by electronic transfer. So a debtor owed us money, and if they pay us, it will go to the CRJ, our bank will increase, and the total amount that the debtor owes us will decrease on the credit side of debtors control. If we receive discount from a supplier, then this is very vague because usually if we receive discount from a supplier, it would be included in a transaction where we've made a payment. Okay, so this will go to the CPJ. The account that will be debited is creditors control because we now owe less because of this discount. And then the account that will be credited is discount received, which is an owner's equity income account. Next one, stock returned by a debtor, and they gave you the selling price and the cost price, which means this will be recorded in the debtors allowances column in the DAJ, and in the cost of sales column in the DAJ. Okay, so it will affect 4 accounts. The selling price part will affect an expense account called debtors allowances on the debit side. Okay, so we carry this loss that we allow the debtor to return stock. And then the debtors account itself will be credited because now they owe us less money. We can't charge them for stock they have returned, and we use the selling price to record in these 2 accounts. Then, because the debtor actually returns stock, cost of sales is also affected. Remember, there is an option where we can make an allowance to a debtor and they don't return stock. Okay, so I hope this just refreshes your term 1 knowledge. So cost of sales, no, trading stock will be debited because now the stock is returned. Okay, so we have more stock in our storeroom, and cost of sales is credited because we are actually reversing the fact that we debited cost of sales before. Okay, and then you have to calculate the cost price. They gave you the markup of 60%, so it's straightforward. Selling price multiplied by 100 divided by 100 plus markup is 115 Rand. Okay. Sorry, my computer is freaking out. So 115 Rand. Then the next one, stock returned to a creditor. If we give stock back to a creditor, it will be recorded in the CAJ. We will owe this creditor less money, so creditors control is debited. and we will have less stock. In our own storeroom, we have returned it to our supplier. In other words, trading stock is credited. Then the owner's private vehicle is repaired, but can you see I highlighted it in green where it said it was not yet paid for. Okay, so if something is not yet paid for, it's in the CJ. Okay, the account that will be debited is not repairs because it's not repairing a vehicle of the business, it's repairing a vehicle of the owner, so it's drawings. And because we haven't paid for it yet, we owe a creditor more money on the credit side. Then discount allowed to a credit customer. A credit customer is a debtor, okay, because it's a customer that we sell stuff on credit to. Okay, it might be confusing, but please don't think it's a creditor, it's a debtor. Discount allowed will be recorded in the CRJ, okay, and this might be a little bit confusing. It's very similar to this transaction here on the 4th, okay, so it's just the opposite of that. Discount allowed will be recorded in the CRJ. It usually goes with a payment that we receive from a debtor, but nonetheless, here we go. So CRJ, the account that is debited, is an expense called discount allowed because now we are paying from our profit, basically, or subtracting from our profit the amount that this customer owed us. And then debtors control is credited because the debtor owes us less money. Then a payment is made to a credit supplier by check. In other words, we're just paying back a creditor in the CPJ. Creditors control is debited. Bank is credited because we've got less money after this transaction. Then goods were sold on credit to Jane. Okay, but the thing is, it was incorrectly charged to Jean. Okay, so important, this is not a DJ transaction. The mistake happened when we charged it to the debtor in the debtor's ledger. To fix this, we recorded in the general journal, okay? And the account that will be debited is the debtor that actually bought the stock, Jane, and the account that will be credited is the debtor that didn't buy the stock, Jean. Okay, so both of them are debtors control. Then we sold stock on credit for 500 Rand, the markup is 150%. This is a normal DJ transaction. And remember, as with any sale, it affects 4 accounts. But in this case, debtors control is debited because the customer didn't pay us yet. Okay, sales is credited. The selling price was 500 Rand. Cost of sales is debited. Trading stock is credited. And you had to go and calculate that cost price by saying selling price over 1 multiplied by 100 over 100 plus markup. In this case, it's 100 plus 150 is 250, gives you a cost price of 200 Rand. Okay. Then the next one is we restored the petty cash imprest amount by check. The word check indicates that this is a CPJ transaction. If we restore the petty cash imprest amount, then we will put money into petty cash, increasing our asset, and we will take money from our bank, decreasing that asset. Now, an allowance made to a debtor, this will be recorded in the DAJ, but this is one of those DAJ scenarios where the debtor didn't return stock, so it only affects 2 accounts, not 4 accounts, only 1 set of accounts. Debtor's allowances is an expense that's debited, and the debtor's account is credited because this allowance means that he owes us less money. Then a debtor's check returned by the bank was marked RD for insufficient funds. Okay, so this will be recorded in the CPJ. Remember, RD checks goes to the CPJ because we recorded it in the CRJ initially, but now this check is dishonored, so we reverse it in the opposite journal, the CPJ. Debtor's control is debited because the debtor owes us the money again. He didn't really pay us or the payment didn't go through. And then bank is credited because we initially thought we will receive money, but now we're not receiving money. So we credit bank. Cancellation of the discount part on an RD check. The reason why I highlighted that in green is because the discount on an RD check is actually cancelled in the general journal. Okay, so debtors control increases because we are reversing the discount. he doesn't deserve discount because he didn't really pay us. And then discount allowed, which is an expense, is now credited because our expense is decreased a little bit. We're not allowing that discount anymore. Then the owner took petty cash for his own use. The reason why I highlighted petty cash is because it indicates that it will take place in the petty cash journal. It's still drawings. And what did he take? He didn't take money from the bank. He took petty cash. So we credit petty cash. Then equipment bought on credit from WW stores was wrongly entered as 816 Rand instead of 618 Rand. The words wrongly entered in green there indicates that it will go to the GJ. Now the mistake that we've made here is we bought stuff on credit, but we credited creditors control with 816 Rand instead of 618 Rand. So we actually credited creditors control with too much. Therefore, we have to go and debit creditors control to make it a little bit less. And we also debited equipment with too much. We overstated the debit. And the only way to decrease that is to credit equipment. And then you just quickly need to calculate the value. It will just be the difference between the two. So it's 816 minus 618 is 198 Rand. Okay. Then the owner returned stock which he had previously taken for his own use. Okay, so if the owner took stock for his own use, it would have been in the general journal. And if he returned stock, still in the general journal. But now our trading stock will actually increase on the debit side because the owner brings stock back. He didn't really want it. And drawings decreases on the credit side because drawings is now a little bit less. Then the next transaction said paid for carriage on stock purchased from petty cash. Okay, so you would have noticed I highlighted carriage on stock in purple. Because this is from petty cash, it will go to the petty cash journal. But the reason why I highlighted carriage on stock is because I want you to remember that we don't have an expense account for carriage on stock or delivery or transport or whatever. We actually add the carriage on stock value to the trading stock account. The reason why is because we see carriage on stock as part of the cost price of our stock. Okay, so remember this. We debit trading stock and we credit petty cash. Then on the 20th, the 20th transaction said cash the check for cash float. If you cash a check, it's in the CPJ, our cash float will increase, our bank will decrease. Insurance premium paid was mistakenly charged to repairs. If you read the word mistakenly, it must immediately tell you general journal. Okay, so the thing is we should have debited insurance and not repairs. So we go and credit repairs to fix this mistake. Then you had to write off the account of a credit customer. Once again, credit customer might be confusing, but it just indicates that it's a debtor. If you write off any account, it will be in the general journal. Bad debts will be debited and debtors control will be credited because now this credit customer or this debtor owes us less money. In fact, he doesn't owe us any money, so we take him out of debtors control. We received interest on fixed deposit. Very important, they didn't say that it's capitalized. So you assume that it's not capitalized. Therefore, it will go to the CRJ. Okay, so our bank increases because we received money. Our interest on fixed deposit account, which is an income account, increases on the credit side. Then we paid interest on the loan by check. The words by check indicates that it's not capitalized. So it's a CPJ transaction. Interest on loan, which is an expense, increases on the debit side. Bank decreases on the credit side because we paid. And then lastly, we received a check from a debtor whose account was previously written off. Okay, so if a debtor's account was previously written off and he comes and he pays us, it won't affect debtors control at all because he's not a debtor anymore. It will go to the CRJ because we received money. Okay. The debit will be bank because the money that we receive will be deposited into our bank. And the credit will not be debtors control. It will be an income account called bad debts recovered. Okay, I hope this was helpful and I hope that you have a great day. Goodbye, boys.